Morning, everyone, and thank you very much for joining me. This is the morning market review. It's Thursday, it's the 15th of September. My name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address is r@fxcm.com. I'm just going to bring up our high-risk investment warning. I'll keep this on screen for a few moments. Hey, Anna, morning to you. Nice to have you on the webinar. Thanks, everyone, for joining, signing in. Hey, Howard. And here's our market commentaries disclaimer. All right, and our references, MarketScope, TradingView, Bloomberg. We're going to go through the 5 things to start your day. And the first headline from that Bloomberg email is energy crisis. European Commission aims to introduce a raft of regulatory changes to alleviate the liquidity squeeze in the energy sector as the bloc ramps up support to industries and consumers affected by Russia's throttling of gas supplies. The proposed measures include raising the clearing threshold for commodities and other derivatives to 4 billion euros and allowing bank guarantees to be accepted as collateral against margin calls. The European Securities and Markets Authority has until 22nd September to respond to the proposals. In France, the government will budget 16 billion euros to limit power and gas price increases to 15% for households and small companies next year. Hey Rob, morning to you. Nice to have you on the webinar. The merge. Cryptocurrencies traded in a tight range Thursday as the clock ticked down to a major software upgrade for Ethereum, the most commercially important blockchain in the digital asset sector. Bitcoin edged up to about $20,000, while Ether, the native token of Ethereum, also made modest gains to hover around $1,605. The revamp, known as the merge, will make Ethereum vastly more energy efficient and over time pave the way for it to scale up and become quicker, according to the network's developers. They say an update years in the making will go smoothly, though some investors are wary of possible hiccups. Waving the white flag, Swedish Prime Minister Magdalena Andersson will resign as a surge in support for a nationalist party helped the right-wing opposition win one of the closest elections ever in the largest Nordic country. Andersson, who became the nation's first female prime minister last year, said she will submit her resignation early Thursday. The announcement came as the country's election authority was about to release the full vote count. Gains by anti-immigrant Sweden Democrats played the key role in the narrow victory of the opposition bloc led by moderate party leader Ulf Kristersson. And just the last headline here reads, Putin's narrowing options. Humiliated by lightning Ukrainian gains on the battlefield, Russian President Vladimir Putin faces narrowing options as he seeks to turn the tide in his struggling invasion. Criticism of Russia's sudden retreat in the northeast Kharkiv region has spread. There are signs the Kremlin may also be redeploying forces to protect Crimea, which Russia annexed as the main prize of its 2014 campaign, in the event Ukraine is able to break through its lines. Meanwhile, Chinese President Xi Jinping is set to meet Putin on Thursday, but is unlikely to throw the Russian leader a lifeline despite their declaration of a no-limits friendship before the invasion. Coming up, European equity futures edged higher and Asian shares advanced as investors assessed the Fed's outlook. US retail sales figures will provide more clarity on the state of the economy as consumers grapple with inflation. Other expected data include Dutch unemployment, Finnish retail sales, and Norwegian foreign trade. And just one final paragraph, and then we'll get into some analysis. And this comes from Cormac Mullen, the Deputy Managing Editor in the Markets team for Bloomberg News in Tokyo. And it reads, this week's US inflation shock may have cemented bets of a supersized September Fed hike, but it's done nothing to dissuade traders that the central bank will be busy cutting rates again next year. in what for me is one of the most important charts today. So what's the charts you're looking at? It's a Bloomberg chart called the Fed Battleground. I'm going to, what am I looking at here? It's the 230-year Treasury spread. So he's looking at an inverted 230s. We'll look at the 210s. All right. With that all said and done, let's take a look at some analysis, see if we can make some money today. All right. So we've got the US dollar on this top chart. We're looking at a weekly. I just wanted to bring up the Fed balance sheet again. That's in the middle. And then I wanted to just tie this all together with real rates. A few things just to keep in mind is that the balance sheet is still normalizing. I think that is a really important variable at work. It's not talked about that often, but of course, as the balance sheet reduces, well, look what's happening to the dollar. It's increasing. That makes sense. Take a look what's happening to real rates. It's increasing. That makes sense. Let's just understand this, and then we'll start looking at some practical applications of this. So what you have here, effectively, if you just take a look at a basic demand and supply diagram, your demand for money is assumed to be downward sloping, and mostly it is. Mostly it is, not always, but mostly it is. Sometimes you have something called a liquidity trap, but that's not the case here. Okay. So what happens is you've got your demand for money downward sloping, and you've got your money supply, which is going to be fixed at any point. Right now, as you and I are talking, there's X amount of dollars. There's various definitions. We generally look at the M2 definition, but it's fixed right now. Okay, and there's an interaction between money supply and money demand, and that interaction is at the intersection. So let's just understand the variables here to complete the picture. The x-axis, well, this is your quantity of money. So, and it's fixed. Okay, it's fixed at the moment. Quantity of money. Okay, and then what's happening on your y-axis? Well, this is the price of money. Okay, your price of money. Well, what's your price of money? It's interest rates. If you want to pay for money, you're going to pay in interest. Okay, so you can go to the bank and borrow money. You're going to have to pay interest. So, and what's happening here is that the supply of money is declining. That's what your balance sheet's telling you here. Okay, there's a balance sheet coming down. Well, how's the balance sheet coming down? Fed's simply selling their assets and then putting the money into a vault. Take this siphoning liquidity out of the economy. It's not getting as much media attention as it needs to get because actually the target, the Fed target, as I understand, is not even being met yet. So they want to get $95 billion out of the economy every month, and they're short. And September was the first month of really they scaled up to the target. But by and large, I think what we can count on, whether they meet target or not, is that your money supply is slowly shifting to the left because it gets siphoning out of the economy. So if it gets siphoned out of the economy, look at the interaction. It's pushing interest rates up. And this, we're not even talking about raising rates. We're just talking about quantitative tightening. So this is kind of happening in the background. And if that's happening in the background, well, you can see that the US dollar is certainly being affected by quantitative tightening and sentiment coming out of the hawkish communication or the hawkish expectations based on rampant inflation. And then your real rates are pushing higher. So this is a very, very interesting chart. something that I looked at yesterday, by the way, because we're about to get into the practical aspects now. Let's get rid of this guy. I don't think we need it. I want to bring this to the top. All right, let's close that. Let's bring this to the top. Okay, let's just take the logarithmic out. Yeah, all right. Now watch this. This is fascinating. Okay, let's bring in the correlation coefficient of the US real rate to the Euro US dollar. Okay, and what you're going to see here is an inverse relationship. And we've got to unpack that. Because what it's saying effectively is that the euro is being determined by US real rates. So despite what ECB is saying, okay, you can see that it's largely the inverse correlation of real rates that is affecting the euro US dollar. On which side? Well, it must be affecting it from the dollar side, right? But the point is there's still an inverse correlation here, and we're at 60%, negative 60%. So this is this will fluctuate between minus 100% and positive 1%. So minus 60% is a decent negative correlation. Well, if that's the case, okay, let's take a look at the euro, and this is the euro weekly chart here, and we've got on the weekly chart. We've got a downtrend. So this is something we've certainly been following for a long time now, but if we can just put in our peaks and troughs. So we'll put in a reference peak, we'll put in a reference trough. And once we've got a lower peak, okay, the next thing that we need to follow is a lower trough. All right, so once you've got a lower peak, lower trough, that's your downtrend is effectively in place. And then here we've actually got a series of lower peaks, lower troughs. Okay, so the trend continues. Here's this lower peak. Okay, now we're getting to the interesting part because we trade on the right-hand side of the chart, right? We trade right where the latest label is going to go. And the latest label is going to be LP question mark. Because we don't actually have the lower peak here. We'll only, because this is a weekly chart, we'll only be able to confirm whether we have a lower peak next week. And the way that we will confirm that is with our reference candle reversal. Okay, so this pattern, okay, something like this. So this is next week's. So the candle to the right, this is next week's candle. So right now, we've just got a potential lower peak, and the potential lower peaks because we've got the potential highest high here. Okay. This is what I'm looking at. However, if this does turn out to be a lower peak, well, of course, the downtrend continues. Take a look at the momentum. So your momentum here is strong. Again, I want to reiterate, stochastics don't have overbought, oversold. Okay, I constantly see that in textbooks, and I constantly think that the authors have no concept of basic mathematics. There's no such thing as oversold, overbought, okay, in a stochastic. So what we have here is a very strong momentum to the downside, okay? So, and as long as we hold in the lower quintile here, as long as we hold to that lower quintile, if you want to be a little bit more sort of loose with it, make it the lower quartile. But the idea is this is strong momentum, but a strong momentum to the downside on a weekly chart. In the midst, now let's tie this together with fundamentals, right? In the midst of quantitative tightening, in the midst of rampant inflation. Now we're talking about global inflation, but it's really the case of the Fed wanting to control US inflation at all costs. So everybody else can do what they want, but the Fed is going to be solely focused on controlling US inflation, and everyone is going to have to work around that. So the point is, okay, we've got a primary trend to the downside. We haven't got the LP completed. We've got LP question mark. But if we go down to the daily chart, yeah, there are some interesting things that are starting to happen. And the first thing is, of course, we're setting up. So what do I mean we're setting up? Well, there's a squeeze here, right? So you can see there's a squeeze in the Bollinger's. Now, this is where it becomes tricky because Bollinger's don't have anything to say about Bollinger's in of themselves have zero to say about the direction of the expansion in volatility. Bollinger did come in with M's and W's, if you read his book, to try and assess the direction of the Bollinger squeezes. But Bollinger squeezes in of themselves are adirectional. So we're starting to get a squeeze here. So I would suggest that there is some volatility coming. Now, is that volatility breakout going to be to the upside or the downside? We don't know, okay? But you can see here's a squeeze, expansion. Here's a squeeze, kind of expansion. So here's the squeeze. So what do? We use our zones, okay? Our zones are going to help clarify. So if we drop into the bearish zone, that's the lower blue, lower red, well then the expansion most likely takes place to the downside. Again, look at your stochastic, it's starting to roll over. So if it rolls over, it heads towards that lower quintile. If we get the euro heading towards the zone 3, well then it's lining up with a obvious primary trend to the downside, which is lining up with an obvious relationship between US real rates and the euro US dollar, which is lining up, of course, with the fact that the Fed is fighting inflation as its primary policy directive at the moment. So all of this is very, very interesting. We are sitting neutral. When I say we're sitting neutral, I mean we are between the blue bands on the daily. But when we go down to the hourly, it gets really exciting. Okay, so what you can see here, let's just tidy this up. There's a little too much happening on this chart. Bear with me a moment. Let's just get rid of the historical. I'm going to put this as just today's pivots. So we just want to take a look at today's pivots. And you can see that there does seem to be some movement off of the central pivot. I think that's secondary, okay, because the fact of the matter is it looks kind of like if we get that pulse, the heartbeat, 1, 2, sort of 2, 3, and it looks like the next part of the heartbeat or the next leg is starting. Now, just to let you know, I do have a short position on here. I'm not recommended, and I don't have a license to give buy or sell advice. On my personal account, I'm short, but I've got a stop loss in, right? So I've got my management, my money management rules. I've got my stop loss. I know how much I am willing to risk. But what I want to see is I want to see the moving averages start developing some angle and separation. So if we get a bullish crossover here, I'm going to close that position because now the angle and separation is, I'm not getting what I want. But it is looking pretty good. It is looking pretty good. Why is it looking pretty good? Because the momentum is right where I want it to be. Okay, the momentum is in that lower quintile. Now, in order for the trade to work out for me, it has to build in this lower quintile. If it pops out of the 20, it's no good. It's time to close the trade, and you just look around for other opportunities, right? Because the market's not cooperating with you. So we're really looking for market cooperation here. So the idea here is, okay, do we build here? And of course, we've got the retail numbers out later, which will play into this. But the idea is, let's just see if we can spot hasn't been a swing for quite some time. There's a swing. Okay, so yeah, you kind of want to see the stochastic hanging around this lower quintile, lower quartile area. Effectively, I'm hoping for this. Okay, so that's euro, and what we can do just to complement this analysis is take a look at US dollar. Okay, so now what we want to see US dollar moving. Want to see US dollar moving in that northeasterly direction. Okay, so what we can see here is that the US dollar is in that zone 1. Okay, so the longer it stays in zone 1, there's not quite the squeeze here that we're seeing on the euro. Okay, but you can see it's in zone 1, so that's positive. I'd like to see this turn up. I'd like to see it turn up. It's a little too flat at the moment, but I want to see it move back towards 80. But of course, this is the key chart. We've got a really strong uptrend here. Now look at this. Let's just do some work on the weekly, and then we'll come back to the hourly. And the weekly here is fascinating. So there was a very weak. It was a very weak red candle, really, sort of at the beginning of the week, wasn't there? And there was a chance of a sort of a swing high here. In other words, if we kind of put in our reference candles, let me just rework this. Okay, if we put in our reference candles, we get kind of something like this. And there was a chance that this week's candle was going to sort of complete the swing high, and then we would have looked for dips. Okay, then we would have looked for dips to see if the dips were compelling. But then the inflation number surprised. The market reacted. It repriced in that new information, and we've actually got a blue candle here. But let's switch it around. Okay, let's take this guy out, and let's put this guy in. Now we've got something a little bit different. Now we can drop this like that. Okay, and then we can look for next week to see if we get a reference candle but to the bullish side. Okay, so the dollar here to me is looking quite interesting. Again, we'll need to adapt this as the variables play out, but it does look quite different to how it was sort of earlier in the week. Take a look at the hourly chart now. In the hourly chart, this has given me sort of what I want to see. So I've got a bullish cross here, trigger 1. I've got a bullish cross here. That's trigger 2, right? How do I know this is going to work out? I don't. Nobody does. Okay, that's why you put a stop loss in. That's why you put money management in. The only way this thing's going to work out is if we hang out in the 80. So if we hang out in the 80, then we get a push up here. And if we get a push up there, then we should get the stochastic hanging out in the 20 on the euro side. Okay, and then we should get this kind of moving. Yeah, so that's the euro. I think it's worthwhile also taking a look at DAX. So just going to bring that up, and all right. One of my layouts has closed down. Doesn't matter. I'll just use this one. All right. Here's the DAX. Let's change this out to main layout. All right, I can't remember drawing this in, but what I can see is it's sort of when the RSI went oversold, we had the swing lows. I can't remember quite why we drew this in, but let's just take this out. Let's put in our rhythm, right? The trend. This is the primary trend because we're on the weekly. We won't put in peaks and troughs, but you can see that the trend is certainly zigzagging We will put in, let's put in the last lower peak because it's not complete yet. It's similar to the euro, right? So we'll put in LP question mark. Let's take this out and let's put in the stochastic just to get a feeling for the momentum. Oh, crikey. I'm looking at the euro US dollar. Sorry. All right. Thanks, Anna. Yeah, Gurdeep and Anna catching me. I'm just going to put that down to a tough week. All right. Let's take a look at the DAX here. I beg your pardon. So we've got the peak, trough, lower peak, lower trough, right? Lower peak, lower trough. No, this is not a lower trough. It's actually a higher trough. Let's put that in. All right, so we've got the higher trough here. Now, what we have with a higher trough is LP question mark. All right, so let's do this analysis. All right. All right. So now this thing makes it a little tougher to get a sort of a directional bead on because we don't have the trend as we did with the euro. So let's take this out. Let's take this out. Let's take this out. Okay. And what do we have when we have a higher trough, lower peak? And this is, to be fair, lower peak question mark. We don't really know if this is going to be a lower peak or not. But when you have something like that, then you actually have a pattern, okay? Then you have a pattern. You don't have a trend. And the pattern here would be a triangle. So it would be like this. Okay. This is what we've got in the DAX. All right, so sorry about that confusion. Thank you, Gurdeep. Thank you, Anna, for pointing it out. Quite important that we're looking at the right chart, right? So we've got lower peak, higher trough, potentially lower peak. What's the big deal here? Well, to me, the big deal is the momentum. Okay, so the momentum is starting to head towards that 20 area. Now, if we're starting to head to that 20 area and we stick, this is the key. I don't know if the DAX is going to hit the lower quintile and stick, but if it does, well, then the breakout must come to the downside. If we get a turn, in the momentum, then the break is to the upside. But the idea here is momentum certainly showing a bias to the downside. Let's just go back to this chart here, and I would be quite interested actually to take a look now at real rates. So we've looked at the correlation coefficient to the euro. Let's take a look at the correlation coefficient to the DAX. This, by the way, I haven't explored before, so this is going to be new to me as well. But it's going to be interesting because we can start marrying the fundamentals up with the technicals. So let's just bring that in and see what we got here. All right, so this is fascinating, isn't it? So we're looking at a weekly chart and the real rate, okay, we're looking at the US real rate, really setting a tone here, And you can see that the correlation's inverse. What we should do, I think, just to make this sort of as complete as possible, is take a look at the Bund. Okay, so let's just bring in the Bund. And there is certainly an inverse relationship on the Bund side as well. Real rates certainly in flux. Okay, real rates certainly in flux here. And if real rates are in flux, okay? And there's an inverse type of correlation. Let's just marry the fundamentals to that. What are we saying? So we've got a triangle here, some sort of consolidation. We've got weak momentum, okay? How do the rates factor in here? Well, the rates factor in here, you guys know it's the present value formula, right? Our time value of money. And what you can just put is your cash flow let's just call it future value. Okay. 1 plus interest. And we'll leave out the exponent. We don't need it because this is telling us everything that we need to know. This guy, interest rate, is pushing up. The present value of the DAX is pushing down. Okay, so as long as we've got that, this inverse relationship makes complete sense. This momentum heading towards 20 makes complete sense. Now, we want to see, does the market continue to punish the DAX? Well, the only way we're going to know is if it hangs out below 20. And if it hangs out below 20, okay, then I would expect the consolidation that we're seeing, which is a triangle, symmetrical triangle, I'd expect a downside breakout. Now, if we get the downside breakout, then the trend, the markings for the trend will change. Then the markings for the trend will change. Then we can change it as follows. Then we'll put it the markings as follows. We'll make this the reference peak. Okay. We'll make this the reference trough. Okay. Now this is we're saying if there's that downside breakout from the triangle, then we'll make this the lower peak, and then we'll be looking for the next leg lower. So the weakness in the market at the moment does seem to have the upper hand. Does have the momentum behind it. We'll continue to keep an eye on it. You go down to the daily now, okay, and what we're looking at here is a movement from zone 1 into zone 2. So there is relative weakness, but we're not in the weak zone yet. Okay, we're not in, and that makes sense because we're consolidating on the weekly. We haven't got that. We're in the middle of a triangle in the weekly, so zone 2 is kind of neutral. Now we know that the weekly is heading towards 20. If it's going to head towards 20 and stick, well, then there has to be some sort of turnaround here. And if we don't get the turnaround here, then we can start talking about what's happening with the consolidation. But at the moment, any hint of a turnaround in the momentum, any movement into zone 3 here, I think we'll start playing into this next lower peak, lower trough. It's not quite as easy to analyze as the euro. The euro has that primary downtrend. The euro is a much more obvious technical pattern, right? But the DAX certainly does have that, does have headwinds that we're going to have to monitor. All right. Sorry about that chart mix-up, but I think we got it right in the end. Are there any questions? Any questions? Please go ahead and type that in. Any questions? Please go ahead, type that in. All good. Okay, cool. Next week on the 22nd, just as a reminder, we're going to be starting our day trading workshop. I took a look at the number of registrations. I'm really pleased with the amount of interest that's garnered. Of course, everyone is invited to join. If you don't have the links for registration, you can just email me. I'll just put my email address up. But I'm looking forward to that. We'll run it over 5 weeks. I'm actually going to do 4 weeks, and then we've got a guest speaker coming in for the 5th week, also talking on day trading. So I think we've got a really nice looking program that we've put together here. All right, I don't see any. What time is it? So it's going to be, I believe it's at 11 a.m. UK, Anna. I think it's 11 a.m. UK. Awesome. Okay, so thank you, Rob. So Rob's in, and thank you, Indran. Much appreciated. I think we can wrap up here. There will be a webinar tomorrow. I want to just thank everyone for your patience you've had with me this week. It really means a lot to me. And then tomorrow we'll tackle the markets again. Thank you very much, guys.